Something just happened that moved XRP 5% in minutes. A US-Iran ceasefire deal was announced, and for a brief window this morning, the crypto market exhaled. XRP jumped from approximately $1.13 to $1.19. Oil dropped below $80 for the first time in months. Stock futures popped 4 to 5% overnight. Asian markets followed. But here is what I need you to understand before you get too comfortable. The deal that moved markets this morning is a 60-day ceasefire extension, not a peace agreement, not a permanent resolution, a ceasefire. And the next 48 hours contain two separate macro events: Japan's rate decision and Wednesday's Fed meeting, that have historically been more dangerous for crypto than almost anything else in recent memory. This week is not resolved because of this morning's news. This week is just getting started. Today I am going to break down exactly what the deal contains, why the market reaction was positive but measured, why oil below $80 matters directly for XRP, what Japan's rate decision has done to Bitcoin 4 times since 2024, and what the short squeeze setup forming on XRP's chart right now is telling us about what could come next. Welcome to XRP Verified. Subscribe and turn on the bell so you never miss a daily update. Let's get into it. Let me start with the deal itself, because you need to understand what was actually announced before you can understand why the market reacted the way it did. The agreement that was announced extends the ceasefire between the United States and Iran for 60 days. It begins a 60-day negotiation period specifically around Iran's nuclear program. The U.S. has committed to removing its naval blockade and reopening the Strait of Hormuz. The U.S. has also committed to discuss sanction relief with Iran and the potential release of frozen Iranian funds. A final agreement, if one is reached, is expected to be signed on June 19th in Switzerland. Now here is the honest assessment of what this means. This is not a peace deal. A peace deal is a permanent, binding agreement that changes the fundamental relationship between the parties involved. A ceasefire is a temporary pause in hostilities. And the first ceasefire between these parties did not hold cleanly. Whether this one does will depend on negotiations that have not even fully started yet. Significant questions remain, including whether Iran's nuclear program will be dismantled, whether Israel will agree to a permanent end to fighting on all fronts, and whether the frozen funds and sanctions relief will be sufficient for Iran to maintain its commitments. Markets are reacting to the removal of immediate worst-case risk, the fear of a broader conflict that would spike oil prices further and create sustained inflationary pressure. That fear being reduced for at least 60 days is genuinely positive for risk assets. But the market is not treating this as a permanent resolution, because it is not one. And that is exactly why XRP moved 5% and not 20%. Now, let me explain why oil falling below $80 matters directly for XRP, because this connection is one most retail investors miss entirely. When the Strait of Hormuz was effectively closed due to military tensions, oil prices spiked. Japan, which is almost entirely dependent on oil imported through that corridor, was directly exposed to energy supply disruption. Other major economies were also affected. Higher oil prices feed directly into inflation, and elevated inflation is the primary reason the Federal Reserve has been reluctant to cut interest rates. High rates mean expensive borrowing, reduced risk appetite, and persistent headwinds for all risk assets, including crypto. Oil dropping below $80, potentially toward the low 70s or even 60s if the ceasefire holds, reverses that dynamic. Lower oil prices reduce inflationary pressure. Reduced inflation gives the Fed more room to cut rates or, at minimum, hold them steady without further hiking. Lower rates are a tailwind for risk assets. Lower rates mean more capital available to flow into crypto. The chain is direct. Ceasefire holds, leads to oil falls, leads to inflation cools, leads to Fed has more flexibility, leads to crypto benefits. That is why oil falling below $80 is not just an energy story. It is a direct input into the conditions that determine whether XRP can sustain a recovery or gets pushed back down by macro headwinds. Now I need to talk about the two events that are coming this week that could disrupt everything, because this is the part of today's picture that most people are underweighting. The first is Japan's rate decision. Since 2024, the Bank of Japan has raised interest rates 4 separate times. In March 2024, July 2024, January 2025, and December 2025. Every single one of those rate hikes has been followed by a significant pullback in both Bitcoin and the broader stock market. Why? Because of the Japan carry trade. For years, institutions borrowed money in Japan at near-zero rates and deployed it into higher-yielding assets globally, including U.S. equities and crypto. When Japan raises rates, that trade becomes less attractive. Institutions start unwinding, selling their risk assets to pay back their yen-denominated loans. The last major unwinding event caused Bitcoin to drop approximately 20 to 30% in a compressed window. Japan's rate decision is expected this week. If the Bank of Japan raises rates, even modestly, the risk of another carry trade unwind episode is real. And coming right after a ceasefire bounce, a sudden 20% crypto pullback would catch most retail investors completely off guard. The second event is Wednesday's Fed meeting under new chair Kevin Warsh. With oil now below $80 and the immediate geopolitical risk reduced, Warsh has somewhat more flexibility than he did last week. The most likely outcome is that rates hold steady at this meeting, which markets are already pricing in at approximately 70% probability. What matters is not the decision itself, but the tone of his statement. Any signal toward rate cuts later in 2026 would be bullish for risk assets. Any signal toward prolonged higher rates would be a headwind. The next 48 hours, Japan on Tuesday, Fed on Wednesday, are genuinely the most critical two-day window for crypto markets in several weeks. Now let me give you the technical picture for XRP specifically, because the chart has something interesting to say right now. XRP bounced from approximately $1.14, a level that has held multiple times during this correction period, and is beginning to form what technical analysts call a potential double bottom. The double bottom pattern, where price tests the same low twice without breaking it, is one of the more reliable reversal signals in technical analysis when it appears with declining selling volume and improving momentum indicators. More importantly, the 13 and 48 period EMA on the 4-hour chart just crossed bullish for the first time since May 15th. That is almost a month since we last saw this specific momentum signal. The last time this crossover appeared, it preceded a meaningful short-term recovery. The key levels to watch right now. $1.19 is immediate resistance. XRP touched this level on the ceasefire bounce and has been consolidating slightly below it. A clean daily close above $1.19 with volume would be the first meaningful confirmation that buyers are back in control. $1.27 is the next significant resistance zone. Reclaiming this level would shift the short-term chart structure from bearish to neutral. $1.34 and above is where the picture starts to look genuinely constructive. On the downside, $1.05 to $1.08 is the critical support zone. Losing this on a daily close would bring the psychological $1 level back into play, and a Japan rate hike combined with a hawkish Fed statement could create the kind of macro shock that tests this level. And one more signal worth noting. There are currently significantly more short positions than long positions open in the XRP derivatives market, a ratio that analysts are describing as one of the highest short imbalances seen in recent months. When short sellers dramatically outnumber long holders, the conditions for a sharp short squeeze exist. The ceasefire bounce this morning was a small preview of what a squeeze can look like, but the full squeeze, the kind that forces a cascade of short sellers to cover simultaneously, has not happened yet. If the Japan and Fed events this week resolve without a major shock, the short squeeze thesis becomes considerably more live. Now let me give you the honest best case and worst case for XRP this week, because you deserve a clear framework, not just optimism. Best case. Japan holds rates steady or raises only minimally. The carry trade does not unwind significantly. Kevin Warsh signals openness to rate flexibility later in 2026. Oil stays below $80 and continues cooling. The ceasefire holds through the June 19th signing date. XRP reclaims $1.27 with volume. The short squeeze accelerates. The Clarity Act moves to a Senate floor vote in mid-July with building momentum. In this scenario, XRP has a credible path toward $1.45 and then $1.64 before the end of the month. Worst case. Japan raises rates 50 basis points or more. The carry trade unwinds aggressively. Bitcoin drops 20 to 30% in a compressed window, as it has done each of the previous 4 times Japan hiked. The ceasefire collapses before June 19th, and oil spikes back above $90. The Fed signals prolonged elevated rates. Clarity Act faces additional delays into August. In this scenario, XRP retests the $1.05 critical support and potentially the psychological $1 level before any recovery. The honest assessment is that both scenarios are possible. The ceasefire news this morning improves the probability distribution toward the better outcome. But Japan and the Fed are two genuinely unpredictable variables that land in the next 48 hours. This is not a week to be over-leveraged in either direction. Here are your key takeaways for today. The US-Iran ceasefire is a genuine positive for risk assets. Oil below $80 directly reduces inflationary pressure and gives the Fed more flexibility. But it is a 60-day extension, not a permanent peace deal. The fragility is real. Japan's rate decision and Wednesday's FOMC are the two events that will determine whether this week's bounce sustains or reverses. Japan has triggered 4 separate crypto sell-offs since 2024. Watch Tuesday and Wednesday closely. XRP's 4-hour EMA crossover is the first bullish momentum signal in almost a month. The double bottom structure at $1.14 is constructive. The short imbalance in derivatives is historically associated with squeeze setups. The key levels: $1.19 immediate resistance, $1.27 breakout trigger, $1.05 critical support. The Clarity Act remains the single most important medium-term catalyst for XRP. Every week that macro conditions stabilize is a week that brings the mid-July Senate floor vote closer without a major disruption. Stay informed, stay patient, and, as always, stay verified.